My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to My Trading Game Plan. My name is Gareth Soloway here to deep dive into the charts on this Monday morning. Sure, it's a holiday week, but believe it or not, we have some good action. Stock market is trading lower this morning, setting up for a down Monday, at least initially. And silver after popping to $84 per ounce overnight is now trading in the mid 60s, a massive reversal. And folks, we got to understand that when everyone is hyped up about something, it usually means it's due for a big correction. Whether or not this is a cycle top, we don't know, but ultimately this is how corrections form. When everyone gets overly bullish, you start hearing calls of $300 silver over the next year. That's when you start to say, wait a minute, these are the same things that happened in Bitcoin in 2021 and even earlier this year in Bitcoin when we heard about a $250,000 price target. Look at it where it is now, and ultimately other assets like AI stocks. So let's start to get into this right now. We're going to start with the S&P 500. Look at this nice little rollover this morning. It's not a big sell-off, but it is interesting to see that we are watching a market have a big, or at least a reasonable pullback on a holiday week, right? It's almost as if the institutions have come back a little early after the Christmas holiday week and are now watching this market, looking to take advantage and maybe even starting to unload into year end. All right. Now, again, part of this could be the silver fact, right? You're starting to see a little nervousness in silver. Look at this drop on silver here, down 8% this morning. If we look at where silver was, look at this, guys. Yet last night it reached near 84. It is now down approximately 13% from the overnight highs. Massive blow off top on Friday, right? We saw the maximum hype. Then over the weekend, so much additional hype. You're hearing all of these things. Oh, China's cutting off supply. And you guys have no idea how many times in comments people have been like, but China's cutting off supply starting January 1st. But there's a major deficit in supply versus demand for silver. You know what I hear out there, folks? I'm going to be brutally honest here because I think that's what it's all about, to be honest with you guys. That to me sounds like narratives driven by institutions for exit liquidity. All right, because watch, the narratives will shift in a split second. And all of a sudden, we'll be hearing about how much extra silver there is. And just watch this happen. Now, by the way, I still think silver longer term goes up. But when you see these parabolic moves, you have to be smart about it. Don't keep falling into the same trap. If you were someone that fell into this in 2021 with Bitcoin, if you were someone that fell into this with some of these AI stocks or Rigetti when it was trading north of $50, now it's basically at $20. You got to learn. It took me a long time, guys, a long time to learn from all of my errors. I finally did, and I'm really trying to help you guys out there if you had trouble with this to not get caught up in the narratives. This is why I follow price charts. Listen, I was thinking silver would have reversed by midweek last week, and I was wrong. Very clear. But would I ever be buying it last week, midweek to late week? Heck no. Not with a parabolic move like that. You stay the heck away and you sit on the sidelines until a better entry comes. And we honestly, I still think on the silver chart, you want to know something, folks? Hate to say it, but I actually think generally the way charts work is if we go to our longer time frame, where could this correct on the silver chart? Likely we'll see a move back in this range. Anywhere, I would say around $50. $51, maybe below 50, that's where you'll get a correction. And then, of course, I will be buying once we get into that range. But again, there's so much weak money. Now, weak money is different, right? You have money that's been buying silver for the last 10, 20, 30 years, right? I bought a majority of my gold and silver between 2010 and 2020, okay? I look at that core holding that I've maintained as I'm a long-term holder, a hodler, if you will, using a crypto term. Think about all the people that are jumping on the bandwagon. All right, the incredible nature of that jumping on the bandwagon and what that ultimately does. And I want to show you guys this picture. Let me show this to you guys because this is something I created over the weekend, and it's so important to understand how this comes about. All right, so we're going to go to the Verified Investing website. I showed it right here. This is a great example. This image right here. When silver was at $20, so few people were looking to buy, right? So few people. Now when it was at 79 per Friday after hours, look, everyone wants to buy. You could put Bitcoin in 2021 here when it was at 3,000 prior, and then when it was at 69,000, you could put, any of these AI stocks. Like you could put Oracle when it was at what, 250, $300, whatever it hit at those highs. I mean, you could just use this over and over. And the reason I'm pointing this out is that this is human psychology. And if you learn to avoid this trap, which is, again, as I said, the narratives can switch overnight. By the way, silver's still falling, nearing $65 here in the early session. But if you can learn to avoid these traps, you will ultimately get into a much better position where you're not getting caught and buying at highs. Don't get caught up in the hype. All right. Don't get caught up in the hype. All right. Let's go back to the charts. We'll go through gold in a minute, guys, by the way. In fact, let's go through gold right now. Look at this fall on gold. Holy cow. Now, the key here is gold is still okay, right? Gold is absolutely still okay as long as it holds this zone. Basically, really the most important is this trend line. So right around 4,300 as gold is getting smoked here, down 3% today. Big fall on gold here, guys. But again, as long as it holds this longer term trend line, it is actually okay and you can maintain a bullish bias. Okay, now listen, you don't want it to violate this former high or have a daily close below, but this trend line to me would be the line in the sand. As long as that holds, it's fine. Okay, now if it starts breaking there, it doesn't mean longer term. And listen, and this is what drives me nuts, folks. And sorry to go off on a rant, but you have people that are getting in silver that got in the last couple days, in the last week, even last night, and they're fly-by-day, try to get rich quick people. And those are the people that end up screwing themselves, frankly. They end up getting hurt because they're buying at the highs, trying to catch a rocket ship that's already up 150% this year alone, right? That's putting yourself with a risk-reward ratio that is horrendous, absolutely horrendous. You got to be buying when everyone else hates it. All right, and I'm going to show you a couple plays today going into 2026 that I actually like as those type of plays. They're value plays. They're large caps. These are good quality names, and I actually think they could be the best performers next year based on technical analysis. All right, but in any case, let's go back to these charts. Look at gold. It's now attacking that former high here at around 43.80 or so. That'll be interesting to monitor. Quickly, let's go back to the futures. Futures are coming back in here, but let's go to the S&P. Now, you guys know I'm no bull going into 2026. Why not? Because all you need to do is look at this chart. And again, I've shown this for 2 months. So listen, if you've watched me even a couple days in a row, you've seen this multiple times. And again, it's such an important chart for those of us that are looking at where the markets are headed in January and potentially February, March, and April of 2026, because we have so little upside until we hit this. Now, listen, there'll be many people out there that says, oh, well, we'll just break through that. Okay, that's fine. But I want the chart to prove itself to me before I go out on that limb, right? I mean, think about it. It's like looking at a wall and being like, oh, I can run right through that wall, and then having someone bet that you can, and being like, yeah, but it's a brick wall. Are you sure you're just going to be able to run at it and slam through? And it's like, well, would you rather bet money that someone can just run into a brick wall and break through? Or would you rather see them break through and then put your bet on it, right? That they're through the wall. It's like common sense. But in investing, people don't use common sense. They get caught up in FOMO. They get caught up in, oh my goodness, people on the internet, on the social media. I mean, how many posts this weekend on social media? $300, $200 silver. And again, use your logic. Pull the reins back on your emotion. If you control your emotion, you can see the difference between hype. And listen, it's not to say that we can't continue up. Like you said, I'm a huge long-term bull on silver and gold. I'm still holding my long-term holdings, but I'm also a realist. And realists understand that when price goes vertical like it has, you're going to see a correction. And then ultimately, you can use that as a buying opportunity, but you don't want to buy up there. That's lunacy. All right, in any case, sorry again about the rant, guys. But anyways, S&P 500 right up here. We'll look for this pullback here. The 10-year yield continues to inch down a little bit today. Nothing new here. Ultimately, I still think this could be bullish consolidation. I still think one of the biggest changes or black swan events in 2026 is going to be that sovereign debt, meaning U.S. debt, other country debt, we're going to see less and less buyers. And in order to get people to buy our long-term debt, the 10-year, the 20-year, the 30-year, we're going to ultimately have to offer higher interest rates. And so while the Fed is going to lower rates in 2026, and listen, we all know this is coming, right? Because Trump is going to put in someone in the Federal Reserve that's going to do what he wants. Ultimately, that is going to degrade the trust factor of the U.S. financial system, and it's going to actually make long end yields go higher in 2026. That's going to be a surprise to a lot of people. By the way, you want to know a scary stat? 10 years ago, 40% of all U.S. debt and sovereign debt was bought by other countries. In this day and age, meaning now, only other countries are only buying 15% of U.S. debt. Where is the other route going? To hedge funds, to all these other funds, which is actually really scary because governments, when a government owns a country's debt, they're not quick to sell because of a profit or because they get panicked. Once you have majority of U.S. debt being owned by funds and these other players, if panic hits, they're going to dump it, and you could see a crash in that scenario, folks. And so, again, these are just things that who knows if they'll come out to play in 2026, but it is risk factors that we all must understand. And think about that. 40% 10 years ago was being bought by sovereign, basically countries. Now, only 15% of U.S. debt is being bought by other countries. Huge shift. And think about all we have to refinance. The U.S. has to, we're going to basically, honestly, I hate to say it, but we're probably going to rely on the Fed to buy a lot of the U.S. debt, which is going to just weaken the system over the longer term, causing a collapse. All right, in any case, let's continue on. The dollar, flat on the day, nothing going on today. Take a look at this. NVIDIA, this is a trend line I showed you guys on NVIDIA last week. We tagged it on Friday. Today, NVIDIA's down. Boom. Technical analysis at work. Major support line. We broke, we retraced, rejected, retraced, rejected. All right. Now, let's go into some of these plays that I think are going to be great plays for 2026. All right. Now, these aren't flashy. They're not supercomputers. They're not AI, right? But ultimately, they're so cheap and they're actually starting to see growth starting to reemerge. We got to look at them. KHC, one of my favorite chart setups. Number one, it's at multi-decade lows, basically back to the 2020 lows. Before that, way further lower. But again, wedge pattern, we broke out, we retraced, bounced, retraced to double bottom, which was also this downsloping descending trend line. There's your bounce. We should see this a top performer in 2026. Occidental Petroleum, all right? They've got some big things going on. What I love about this is the inverse head and shoulder pattern forming potentially here. The possibility that oil could actually have a great year. Maybe that's the commodity that starts to get money flow. I've dissected that for you guys recently. And also, anyone who buys now on Oxy or OXY, Occidental Petroleum, is getting it $5 cheaper than Warren Buffett bought it. That's kind of cool to think about, right? All right, so that's an interesting one. Look at ConAgra. This is probably my favorite one going into 2026. There's a trend line on ConAgra that goes back to 1982, connects through the low of the financial crisis, and we've just hit that trend line. There's another trend line that goes back to 1997, connects through the lows in 2014 and the lows in 2018, and we're also hitting that. Look at the two trend lines merging. This trend line, a 40-plus year trend line. This is a 30-year-plus trend line. This, to me, is one of the most powerful things when you see long-term trend lines merging at price. This, to me, is a very attractive potential player in the next 12 months. All right, let's get back to gold. I want to check in on gold. Gold getting a small bounce off that level here. You can see again right there. It hit the line. It hit the former highs right here, getting a small bounce. Silver's getting a tiny bounce as well. Not much if we go to our 10-minute chart. Again, by the way, this is showing on the 10-minute chart where it got to last night, near $84. Then it collapsed, bounced, and it's just collapsing down again here. Incredible dump out there. But again, where am I looking on this? So number one, we could be staging a nasty daily reversal candle. Granted, it's very early in the day, but if we close below, let's see, below 7180, you're going to get an engulfing reversal candle, which would be extremely bearish on the silver chart. Platinum today, big drop on platinum, down 10% on platinum. And look at palladium, down 14%. Now, believe it or not, palladium, right at this level, there could be a day trade today. Again, the PALL is a way to day trade that. It's an ETF. But nonetheless, that pivot high right there is definitely something I'm monitoring today as a day trade on palladium. All right, flipping over to Bitcoin. We'll touch on oil in a second. Bitcoin started to see some money flow. It's lost its luster. Let's see today if silver stays down in the coming days. Do we see money flow starting to rotate from the metals into Bitcoin? We saw it a little bit overnight, and now seller has emerged and pushed it back down. But let's watch and see if there's money rotation here. So far, stock market's down this morning. Metals are down. Bitcoin's basically flat. Let's watch and see, because this could be the surprise early player in January that maybe outperforms the NASDAQ, the S&P, and the precious metals potentially. All right, let's continue on here. Let's take a look at the U.S. oil chart. Oil's getting a bounce here. Had a pretty nasty Friday because we heard that President Trump was going to meet with Zelensky over the weekend about Ukraine, and he even had a call with Putin, but nothing really came of it. So oil right back up. I'm still on a technical analysis basis watching to see if we break out on the chart. Can we break out here on the oil chart? Maybe this is the play going into 2026 that has a big mover. Let's look at natural gas here. If we look at the nat gas chart here, bear with me as I bring that up. Okay, let's take a look here. We'll even just go to, I got to pull up the right chart here. Bear with me. But ultimately, natural gas hit that gap fill, okay? And ultimately, at that point, we've seen it come back in here. And I'm just looking for the right chart. I like to do the capital.com chart, but it's not coming up. That's okay. No big deal here, folks. We'll just look at this. We have the UNG, and if we go to the pre-market, natural gas is trading up. So that gap fill from last week, which was a beautiful thing, you can see it right in here. This gap fill, we've seen a bounce, and natural gas looks to be trading up, probably also on the back of the news that there was no major breakthrough with Russia and Ukraine in terms of the fighting and war. All right, so listen, folks, this is today's big lesson, right? We've looked at the S&P. We know that's nearing major epic resistance. It's the risk reward favors the downside here, unless it can break through that line. Silver, that's where the story is, right? That was the story on the upside last week. Big correction today. I have no clue, honestly, where it's going to close today. But again, the signs that we've seen in this trade on Friday especially, which, by the way, was a very light volume trading day. Never trust big upside when you get it on the lightest trading day of the year, mind you. That's just a lesson that we all have to remember. But again, the euphoria over the weekend, the price target calls by supposed influencers online, all of those yield a liquidity narrative that was driven by probably bigger players out there that were looking to push these, China. And listen, by the way, China is curbing the supply of silver. That is actually fair. But believe it or not, it's not that much in the scheme of the entire thing. Plus, think about this. You have poor countries where they bought metals like crazy. India, other countries. You think that when they can get $70 or $80 per ounce in dollars, they're not going to sell that and take some profits, and there's going to be a flood of sellers that have been accumulating silver. Some of these foreign countries, that's what they buy. They buy gold and silver. Good for them, by the way. Congratulations out there to all of those that have been accumulating it for decades versus the fly-by-night traders that try to, or investors that try to catch lightning in a bottle. Because again, that's really where, listen, you've sat around, you've waited patiently like myself. Now we're getting paid out. But again, we also have to be realistic. Yes, I think all the metals are going higher over the next few years, but you also have to be recognizing top signals. And there's a top signal there. The reversal today might signal it. All right, guys, I got to get going to my trading room, but awesome stuff today. Let's see where the market is. It's a holiday week. We have Wednesday, New Year's Eve. Markets are normal. Thursday, markets are closed. Normal day Friday, but still kind of a pseudo holiday week here. Have a great one. Thanks for tuning in. Please share and comment, and I'll touch base with you guys soon. Have a good one. Take care.
Welcome back to Crypto Combat, Wrecked or Rich, where pro traders throw real money into real-time crypto chaos for cash, glory, and bragging rights.
Real money, real trades, and real consequences.
This week, Everett steps in as referee, Liz sets the stage, and the poll is nearly dead even. Lawton versus Ben.
Who will dominate to be the champ this week? Will it be Lawton? Or will it be Ben?
Same rules, same pressure.
45 minutes on the game clock.
And it didn't take long for the room to split in half.
I'm taking a look at Lumia USDT. I'm looking to go long here. I'm going to go a 20% of my portfolio. Let's go 20x leverage.
Guys, I'm about to enter a position.
All right, I am long on Lumia.
Ben came out swinging. Lumia long, then pendulum, trying to catch the holiday bounce.
I went short Bitcoin. I went short $100,000 in Bitcoin. I have a 10K account, 150x leverage. I'm short Bitcoin, $100,000 in there. I did market order.
Lawton did what Lawton does. Max leverage, big size, zero fear, and immediately turned it into a fight. The problem? The market was quiet, but the trash talk wasn't.
Dude, this is crazy how quiet it is.
Yeah, we did expect that, but the game must go on.
So the strategy became simple. Either go heavier or get stuck.
I have $0 available. Like I'm all in.
And once buying power disappears, your options disappear with it. Lawton found his edge in Solana, shorts that actually paid, while Ben watched Lumia bleed with no room to maneuver.
And I'm putting a stop loss at $120 in the money. I'm gonna let this thing keep falling. All right, I got stopped out, made 120 bucks.
Get it 305 bucks.
Hey, holding hands, brother. Holding hands.
Ben's bounce thesis got hit with reality, and Lawton kept stacking small wins like it was target practice. Then came the fake out. Bitcoin looked ready to rip, and the arena held its breath.
Here would be the
Oh my
breakout.
God.
Bitcoin's
You're
breaking
getting
out, guys. So it was a
Oh,
bull
wow.
trap. It was a
Wow.
bull trap.
Lawton survived it, even clipped a tiny Bitcoin gain.
Stopped out for $8 gain on Bitcoin. Oof.
Because in this game, green is green, even if it's $8. And like history loves to repeat, Ben's trade finally started working, right when time was running out.
In classic fashion, Ben's trade comes in after time has closed. We have 1 minute left.
When the dust settled, Lawton walks out with the win. Ben goes home wrecked again. Same arena, same rules. Next week, they're begging for volatility. This is Crypto Combat, wrecked or rich.